Good afternoon, folks. Drew Rathgeber here with ProFuturesTrader.com. Here with just another market update, just kind of some things that we're looking at, just some trading ideas. This is not specific trading advice or trade recommendations. As we know, everybody's got different risk tolerances and different risk objectives. So again, this is just some stuff that we've looked at and we're watching, but we are actively trading with our clients on a daily basis. I'm not going to tell you specifics about that, but in saying that, we are in these markets daily. So let's go ahead and start off. Steve, I see you've got the S&P 500 here for us. Go ahead and tell us what you're looking at.
Yeah, okay. This week was marked by three major events, in my opinion, two of them in the stock market. If you recall, in our last video, we were noticing that the stock market was breaking out to new all-time highs. And then just Monday, something happened. And it was in that China had come out with some sort of AI alternative to a lot of the developments that ChatGPT and some of those companies were doing, found a much more efficient way to produce AI. And I don't know anything about AI. I'll say it like that. I don't really understand the ramifications, but the market did not like it. I do know that. And so we had a pretty strong sell-off there Monday. And then the markets kind of rallied back and kind of fought back all week. And then Friday, the news came out that the Trump administration was putting on tariffs, and the market didn't like that news. And so we sold off going into the close Friday. So that's really all I had there, Drew. It was just
yeah, let me just make a comment. Interesting week. Friday was fun for me. Pretty active in the NASDAQ for me. Not going to say specifically, but it was a fun day with that sell-off. That's all I got to say. And just get that volatility in the markets. I personally, overall, I felt for a long time the markets are really overvalued and due for some type of healthy correction or corrective activity. And I think it's coming. I kind of feel like Trump, and even Elon mentioned, we might be in for a couple rough years while we go through all these changes and transitions. He had mentioned that, hey, it's not going to be easy for everyone for maybe a year or two while we go through this. So my gut instinct is we're going to see more and more kind of sell-offs, kind of a reset as these tariffs and more economic policies, and we see everybody getting fired. In the doji and a lot of things, and seeing how the markets are going to digest that, I think we're going to be seeing some more volatility in the future. But let's take a look at one of my favorites, gold. So,
yes, how about that gold? So a week ago, we had just broken out of that triangle. And then this week, we broke out, made new all-time highs. And I adjusted the cycle counts a little bit to account for the fact that we had traded into that triangle. And so on my new cycle counts, we're on week 6. That's still very early in a cycle, which normally runs over 20 days. So I still think that this bull run in gold, this next intermediate cycle, probably has another 20 weeks in front of it, 18 to 20 weeks, another couple months anyway. And so I would be buying and holding. The environment in the gold market right now is very good. There are beginning to be shortages pop up. And you may know more about what happened there with the London Metals Exchange than I do, Drew. But
yeah,
apparently there's some shortages happening.
Yeah, it's not, I went and researched it using the Grok AI, and it's not like confirmed. The LBMA came out with no comment, and the gold bug community, big conspiracy mindset, immediately jumped on. They're running out because of the shipping delays. What used to take a couple days is now taken, I believe, 3 to 4 weeks. So there's a lot of speculation, but it's not been proven. So I would just be cognizant of that. There's a lot of speculation right now in the LBMA, basically a run on their metal, but there's also been a lot of metal coming back into COMEX, being shipped back. So I know inventory levels have increased here in the United States significantly. So that we'll have to wait and see. But the narrative is, and it is very bullish overall, in my opinion. And I'll get to my charts here in a second, but I have a kind of similar setup.
Okay. Well, I think we're going to see strength in all the markets. This is the silver slide, and you can see we're retesting this resistance area around 32.75. This is the fourth time that we've been knocking on the door. And so I expect this to break out and follow gold higher. And I'm not sure 35 is going to hold true. I think that it could go much higher. I won't speculate how much higher, but just like gold, we're on week 6 of an intermediate cycle. So buying gold or buying silver early in an intermediate cycle is what you want to do. I know people are kind of scared and thinking it's still not going to go anywhere, but that's your sign that you should be a buyer of precious metals. Is you need to be buying early. You don't need to be buying late whenever it seems like it's just going to keep on going up forever. You need to buy early so you can catch the majority of the move.
Yeah, I have to agree. And just look at a couple of markets like coffee. The client call in, it was going parabolic and irrational. And I'm kind of hoping the metals, particularly silver, kind of does something irrational like that. Fingers crossed, we'll see. But I'm watching a lot of the other commodity markets really take off and become very parabolic. So, All right, let's take a look at the gold-silver ratio.
Yes, and what I wanted to point out, this gold-silver ratio, it's up around 90. That's historically very high, and that just means that the price relative to of gold relative to silver is very expensive. And so, if we're bullish gold, then you might expect that silver is going to do even better because it's got some catching up to do.
Yep.
Cycles wise, early on in these intermediate cycles, gold tends to take off and lead first, which it has done. It's making new all-time highs. Silver's still just trying to get broken out so that it can move on up above 33 finally. But late in the cycle, you'll see this gold-silver ratio drop because silver catches up in a hurry. Silver starts catching up fast. And when that does, this gold-silver ratio drops. And you can see on this chart how at the bottom of these spikes lower, that usually marks the end of the intermediate cycle for the metals. So we'll be watching this closely. Once we start seeing this Dow gold, this gold silver ratio catching up, that it's dropping in a hurry, we're going to start controlling our greed then and be expecting that we're near an intermediate top.
Yeah, I like following the gold silver ratio personally. Just kind of an odds game. And when it does get to these levels, you want to see it start dropping and play catch up here. Because like you said, it's at historic highs. So I definitely like this chart. So let's go and take a look at the, I mentioned coffee. Here we go.
Yeah, I talked about it at the end of the video last week as a possible trade idea, and that it was making some sort of cup. And it has completed the move that I was expecting it to make. Just wanted a note of interest there that it has made a move, and I find these kinds of moves interesting. And then I've got a new idea for people that are maybe thinking, well, gold and silver, they've already left the station. This next slide, Drew, shows copper. And copper for the first 3 weeks of February has been a profitable trade in 13 of the last 15 years. And we're still in the same stage. We're week 6, but it has pulled back pretty good, making some sort of flag there right at the 200-day moving average. And my expectation is that out of the blue, we're going to see copper explode higher and have a pretty strong move, maybe back up to those May highs before this is over.
Fantastic. So, all right, well, let's go ahead and switch it over to my side. Thank you, Steve. Let me go ahead and, I brought up my silver here. This is May silver we're looking at. This week I was watching these trend lines. We got a double setup, and it did break. And the interesting thing back on, what was that, January 16th, I actually thought we were going to break because we broke just above this high right here. And I was like, thinking, here we go. And it did retrace here a bit, but we got a fresh, what we call angel cross with the 15 and 40 moving average. So it's holding. We need a few more days to fully confirm this. I would like to see this trade at this level or above the, let's just say above the 32 area for another 2 or 3 or 4 days or so to fully confirm this breakout. But again, like Steve said earlier, I would like to see silver take off. I know there's a lot of silver bugs out there that are frustrated that silver is not at $50 an ounce based on the price of where gold is. But it could be explosive. We got a fresh cross here. And again, I'm looking for that support area to be around the 3165-ish area right now. But I would like it definitely to kind of pull away from these moving averages and continue that bullish momentum. But we'll have to wait till next week. Let's take a look at the bonds. So, this is interesting. I've got some pretty large bond traders. And, the narrative, and you can see here, it's working on some upside action. And the thing is, I'm watching is, Trump is basically point blank come out and said he wants the interest rates to be lower. Okay. So I'm really expecting these bonds to do some type of reversal if he keeps that narrative going and really wants to stimulate the housing market, for instance, and the economy as a whole. Because right now I think we got over 7% on the mortgage. But so I'm kind of thinking that this huge down run that we've had could be cooling off, and would be nice. Not confirmed yet, but just watching closely to see if this the bonds, the 30-year bonds, and this is March we're looking at, does do reversal. Not confirmed, just watching closely. So just keep an eye on this right now. You can see it came off at bottoms intraday, and it'd be nice to see this thing finally turn around. Let's go ahead and take a look at natural gas. So this did have a pretty good spike. Then we got some warm weather. So right now you could possibly, and again, this is not a trade recommendation, but if you're looking to possibly get long, it really has come off. I'm not trading this right now, but just want to point out how it really did spike up to the 380 area and really came off down from that. But again, if you're looking for a small entry, you could possibly have one here, but again, manage that risk. Let's take a look at the NQ. This was a fun market on Friday. You can see we had a pretty good doji star right here. So effectively, we are trending down, and I expect this, and I'm thinking, same with the YM, that we're going to continue going down. So you can see we peaked out here on December 17th. And again, I think with the tariffs and a lot of the instability, and you look at Warren Buffett, he's sitting on a large cash position. You look at a lot of the big traders, and they're getting out of the markets and going to cash. So I'm kind of thinking, and this is the whole, was it the DeepSeek, I believe the AI with China, kind of throwing things up on end. So I'm kind of thinking we're going to continue possibly coming off in the Dow and the NQ as well. So those are some basic things I'm kind of watching closely. Steve, do you have any other comments that you'd like to get out there as far as this week?
No, you're noticing the same things I'm noticing. I almost presented the bond chart just like you did.
Yeah.
And I also noticed that the NASDAQ has not followed the S&P to new heights. So seems to be kind of dragging on the market a little bit.
Yep.
I'm not sure how to interpret that. Yeah,
I agree. So we'll have to wait and see. But yeah, I've been watching the bonds real close going, oh, are we going to do a narrative change here? So, they've been hiking. They paused, and we might be seeing a narrative change. Be interesting to see how the market reacts if we do drop interest rates. But, we'll have to wait and see what the Feds do. So that's it for this week. And again, Steve, you have anything else to say?
No, I think we covered it.
All right. Well, if you guys have any comments or questions, you're more than welcome to reach out to us at our direct phone number that's listed on our ProFuturesTrader.com. And if you want, you can follow Steve Wade. He's got that Wade's Trade Advisory, and he's a great trader. So, if you have any questions for him, he's really entrenched in the farming market as well. And, out there in Kentucky. So if you have any questions for him, you can reach out to him as well. Other than that, hope you guys all have a great trading day. Take care. Bye.